Hello, and thanks for tuning in to our weekly mortgage and economics segment. I'm Megan Abdelaziz, Real Estate SINY.com's mortgage and economics reporter. The mortgage rates had an uptick in their movements this week. The 30-year fixed rate is at 4.35%. The 15-year fixed rate is at 3.42%, and the 5-year adjustable rate is at 3.25%. With the U.S. Treasury bond yields moving slightly up, and investors worrying about what the next employment report is going to say, these two aspects caused the rates to move up slightly. This week, we will take a look at the financial markets, 3 economic indicator reports, how Americans are viewing the economy, and the mortgage applications. First, in the financial markets, the stocks and Treasury bond yields increased, but not steadily. The stock markets had a mostly up week, but they did fall at points. The Dow Jones went from about 15,619 at opening bell Thursday, October 31st, and was up to about 15,746 by closing bell Wednesday, November 6th. The S&P 500 went from about 1,763 at opening bell that same Thursday and was up to about 1,770 by closing bell that same Wednesday. As for the 10-year U.S. Treasury bond yield, it went from 2.57% that Thursday, and it was up to 2.67% by that Wednesday. Next, we took a look at 3 economic indicator reports, 2 on the housing market and 1 on the U.S. Real GDP. The first housing report we looked at was released by the U.S. Census Bureau on Tuesday, November 5th. This report deals with the residential vacancies and home ownership rate for the third quarter of 2013. According to the report, the home ownership rate was up to 65.3% in the third quarter, and the national vacancy rate for homeowner housing was unchanged at 1.9%. This report showed us that there are slightly more homeowners actually living in their houses than people renting homes. The second housing report we looked at was on the home prices for existing homes in the third quarter of 2013. This report was released by the National Association of Realtors on Wednesday, November 6th. In the third quarter, the national median existing home price for single-family homes was up to $207,300. The national total of existing home sales was at 5.36 million by the end of the third quarter, and there were 2.21 million existing homes still on the market by the end of the third quarter. The last economic indicator report we took a look at was on the Real Gross Domestic Product, also known as the Real GDP, advanced estimate for the third quarter of 2013. This was released on Thursday, November 7th, by the Bureau of Economic Analysis. According to their report, the final number for the real GDP for the second quarter of 2013 increased 2.5%, which is what they stated in their second and third estimates for that quarter. For their advanced estimate for the third quarter, it increased 2.8%. Since this is only their advanced estimate, we will still have 2 more estimates before we find out how much it really increased. Now to take a look at Americans' confidence in the economy through Gallup.com's report that was released on Tuesday, November 5th. In this week's report, they talk about the confidence level for the week of October 28th through November 3rd, and for the month of October. First, we will look at the weekly levels since it plays a role in the averages for the month of October. For that week, Americans had a slightly more optimistic view on the economy, but not much. In Gallup.com's poll on Americans' net ratings of economic outlook, it showed that 64% of Americans still think the economy is getting worse, but 33% now think it is getting better. In the poll on Americans' net ratings of current economic conditions, it came back with results of 42% of Americans feeling that the current conditions are poor, and 15% feeling that they are excellent or good. With these new results, it gave Gallup an economic confidence index of -29 for that week. In the monthly average levels of these indices, they dropped a significant amount in October, mostly from the government being partially shut down. The index for their poll on Americans' net ratings of economic outlook had a monthly average of -40. The index for their poll on Americans' net ratings of current economic conditions had a monthly average of -29. As for the monthly average for the Economic Confidence Index, it was down to -35 in October. This is the first time in almost 2 years that these indices are this low. Hopefully next month we will see an improvement since the weekly surveys have been increasing lately. Lastly, we took a look at the Mortgage Bankers Association's weekly mortgage application survey. This report was released on Wednesday, November 6th, and is for the week ending for November 1st. In this report, they noted that their market composite index decreased 7%. Their refinance index decreased 8%, their purchase index decreased 5%, and the amount of applications submitted for refinances was back down to 66%. Next week, we will only have the Employment Situation Summary Report to look at, plus our other usual reports we look at each week. Depending on how the employment report looks, the mortgage rates should stay around where they are now. Make sure you check back with us next week to see where the mortgage rates will go. Thank you for watching, and be sure to like us on Facebook, follow us on Google+, Twitter, and Pinterest, and subscribe to our YouTube channel. Also, don't forget you can read the full mortgage and economic report on trendingsiny.com, which is a division of realestatesiny.com. Realestatesiny.com is a full-service real estate brokerage located on Staten Island. If you are looking to buy or sell your home, you can contact us at 718-966-9669, and one of our experienced agents will gladly help you. If you simply just want to browse the latest listings or keep up with the market statistics, you can visit our website at realestatesiny.com.